All right, heading into another week, June 11th, 2021. Chris, I see you're stylishly dressed for our podcast today.
Ready for the weekend, Tom.
What are we wearing? That's what they say at the fashion shows, right? What are you wearing?
What are we wearing? Well, I'm sporting the Eddie Bauer Born to Roam t-shirt.
See, and I'm sporting the Tom's Trading Room candlestick shirts.
Ooh, look at that. It's shiny.
It is. Yeah, it's just a light. It's just a light shining off me. I'm a little bit more on the white balance, less on the yellow balance today as we head into the weekend.
There we go.
So what's on the radar for news that you saw that moved the markets or did not move the markets this week?
Well, obviously, inflation. Everybody's worried about inflation right now. I mean, if you had to narrow it down to two or three things, crypto, which is everything I love to talk about with you. Crypto still hitting those headlines. Meme stocks hitting the headlines in a big way. You've got a couple new ones with WWE slipping in the door, and then clean energy, CLNE. So now there are a couple new ones in that fraternity. And then I'd have to say inflation. I mean, everybody is worried about what we already know, and we see the numbers coming through. So, those are the three things I think people are kind of, at least on the headline level, really looking at. How about you?
Yeah, absolutely. I mean, top story this week has been inflation. Mm-hmm. Consumer prices are in the U.S. are topping forecasts, so that's actually pushing the concern. You look at the yields. What happened to bond yields this week? Yep. I mean, a lot of folks jumped into bonds very quickly, thinking that the market was going to drop. And I think that might be the biggest surprise, that the market did not fall off as a lot of traders expected. But this is one of those markets where, you can have a company that does absolutely nothing and forecast losses, and yet the Reddit community will push it ever so much higher. And we'll look at the GMCs and the GMEs, AMCs, and give them their 15 minutes they deserve.
Right.
But at the end of the day, that's really it. I mean, look at the inflation numbers that came in yesterday. They really did. I mean, they weren't a surprise to me. How about you?
No, not a bit. I mean, we have been talking about this for 6 months now. And, let's face it, the word taper tantrum has been let out of the bag already. Everybody's starting to worry about this a little bit, but the market has got that resilience. I think it's a little bit of that FOMO market that's still going on here, as well as the fact that, I mean, you and I both have seen this for decades. If the market expects something and it happens, it can deal with it much better than if it doesn't. If we had inflation numbers that were coming out of the folder that were hotter than fire and we weren't expecting that, then you'd have a problem. But right now, the market has set the bar for inflation to be there. So this is just, we may grind lower. And I think if you look at small cap stocks, small cap IWC, IWM, they're suffering right now because that's where inflation's going to hit. You're also going to get technology that's going to get hit here. Industrials, guess what? They're going to get some strength out of this.
Yeah.
And financials.
And look at, so the biggest stock, I think the big stock story, if you take away the Reddit community and see what's left over, biggest story this week was Biogen.
Oh, yeah.
By far. I mean, FDA approval of their Alzheimer drug, the $56,000 drug. It's that shot the stock up quite a bit. Let me put a chart on the screen so everybody can see that. And you can see here that, and I'm just going to change. I've got an 80-day chart on. We don't need an 80-day chart. I can go with a 10-day chart, and it's going to look a lot the same.
Yeah.
I mean, you're talking about, here's what was going on for 80 days, and it was happening again for the last week. But then this was the weekend, and, they had, what ended up happening was the FDA had until Monday to reach a decision, win, lose, or draw. It was kind of like charge me or let me go. And they decided to let them go and say, we're approving this drug. And that's where you saw that big bump up from price levels that were below $300 up to $400. Option traders had roughly 80 to 100 points plugged into this move ahead of time. And so what I want to show everyone here in podcast land is what happened last week. So I'm actually going to go back, and this is something we have the ability to do, Chris, is we can go back in time. And I'm actually going to set us back to the 4th. So I'm going to set us back to last week's podcast. All right. And you can see what was going on with Biogen. It, was in that 288, down to 268, back up to 288 range, just kind of plugging along there. What I want to show everyone is what the option chains look like. And so we're going to look at the option chains that expired today, June 11th. And I want to share with everyone what these option chains look like. So here's Biogen last week, right? So you can see stock was at 286.14. And, the 285 calls are probably in the money. And you can see they priced them right around 40 points on the call side, and then right around 37-ish on the put side. So we're talking about something close to $80. So what this tells me is that option traders were expecting an 80-point swing above or below the stock price.
Yep.
So I looked at that because I'm looking at these IV numbers. I'm like, wow. Then me and the research team did a little, we went back in time and went, all right, every time Biogen had a big announcement, how much did the stock actually move? It actually moved roughly 100 points. And then I thought, you know what? Do I want to own Biogen even if the drug doesn't meet FDA requirements? And the answer that I had was yes. All right, I'll own it, but I don't want to own it here. So being as it was trading around the 286 level, I looked at this and I said, you know what? I want to own this. So you know what I ended up doing, Chris? I went down, not 10% out of the money. Let's go down 40%. Because I want to share with you what I was looking at. I was looking at those 200 puts. The 200 puts were trading are at 350. Right? You know where they're trading at today? Let's fast forward. And I'm just going to update myself to latest data. And let's look at those. I got to go back down and look at the 200 puts again, because the stock's now jumped, and the stock jumps, and I sold those puts. Those puts are, they're like zero bid by a nickel, I believe. And I really need to go as far down as I possibly can, just to show everybody where those puts ended up. And so here we go. 200 puts. I'm going to blow them up on the screen. There they are. Zero bid by 5, just as suggested, because they're worthless. They're worthless. All right. But I sold those. I had those sold, at that 350 level, and I got to keep that. So that was a good move on my part. But I was all willing to take this stock at 200 if it did go down.
The other side of that, for the traders who don't know, is it goes down, you get assigned, and you already said you were okay with buying Biogen at that price. So this was a great trade for looking at either or.
Yeah, it's called
either or trades.
And it's called cash secured put selling. It's designed where as long as you have the cash in your account to accept that stock, then you're not overextending yourself. And that's where I think people go wrong in the put selling world, is that they extend themselves far beyond what it is they can afford to purchase if they end up getting the stock.
Yep.
So wanted to share that with everybody. So Chris, I'm going to ask you, what are you looking at right now that's, that you want to pop up on the screen?
Let me throw out an interesting little take I just pulled up real quickly in my database here, Tom, and it's just one of those things that I was wondering about with Biogen, which is up on the screen here.
Yeah.
Short interest. As you know, everybody's talking about short squeezes, and that's the big thing of the day. When the meme stocks are shorts, and shorts are different in my world than a short squeeze that, happens over a couple minutes type of period of these meme stock shorts. But the average, historically, when you look at short interest on biotech stocks, they are the highest shorted group in the market. If you look at indices, if you break down all the ETFs, and the reason for that is simple. It's because you find a situation like a Biogen where if the FDA had not said, yep, we're going to let you go, and instead it said, nope, you can't do anything with it, Biogen drops down the 150 points or whatever, the shorts make money there. Biogen is the least shorted company in the biotech sector. The average short interest ratio right now, 8.2 for the XBI. Biogen weighs in at a 3. I think that's really interesting, and it says something about where this FDA the expectations for this FDA decision were, because otherwise the shorts would have been all over this stock, absolutely all over it. So a couple different reads, and I love your read on actually looking at the option activity there, and also the Bollinger Bands, everything telling you this stock was going to fly. One thing, and I'll pull it up on my screen, talked about it a little bit this morning with the group, Stag, industrial company, and this is what I call a plug and play REIT. We're in this reopening, and reopening right now is that big phrase that everybody's talking about. But we think about AMC and we think about concerts and all that. This is a REIT that what they do is they've got industrial spaces that are rigged certain ways for certain manufacturing operations that can come in and basically plug and play their manufacturing into an existing building. I think this is a great, when you think about reopening, how many companies out there are going to either they're new and they're coming out with their new facilities and they don't want to put that capital in. Boom, you go and you rent it from Stag Industrials. This company popped up on my volatility band last week, as well as my short squeezes. And I think when you look at the REITs and what we talk about with interest rates going higher, you've got investors that are starting to look for more creative ways to get growth and income. Man, check out you don't have to look at Stag. I think that's one of them that's worthy of a look, but look at the IYR and the companies there. There's a lot of movement. Nobody's talking about it. And that always makes for a good long-term run when nobody recognizes it yet.
All right, let's take a look. And what I want to do now is I want to move forward. Let's talk about AMC, GME. I'm going to throw up on the chart here, and we'll take a look at it real quick. Let's start with AMC. So from here, AMC. I've got crypto charts up here. I definitely want to get into crypto too. So we'll catch that in just a second. But AMC is the big, it's the big Reddit stock on the block this week, and it's really because they're the ones that have the volatility right now. I'm going to show everyone, what I mean by that volatility in just a few minutes. But it's the mover. It's the mover this week. GME. There was some news that came out yesterday or this week on GME, where they announced their new CEO. They announced a new CFO, and they both ended up, I believe, coming from Amazon.
Yes.
So I want to take a look at that. But if you see what happened with AMC, big push to the upside. I mean, we got up to 70, and now what's going on? So when you look at this candle, this big candle, as a technical trader, look what's happened since that candle. First of all, you kind of come down, you look, that was the biggest volume that day that the candle actually happened. Volume has been dropping ever since. Now, the other thing that's gone on is that you entered an oversold area, but the oversold area came in long before where we were. Just because something is oversold doesn't mean it's going down the next day.
Nope.
But notice it came out of oversold the day after the candle. And the third thing I noticed is we created an inside bar. We have not gone above this high, that all-time high. We have not gone below the low of 35 over the last week. But we break below that candle, that low candle. I believe we're back down below 30. I believe we're back down in the 20s. And people that bought this thing at 70, and people that bought call options, they're the ones that are going to suffer the most. The ones that bought these near-dated call options, it's unfortunate. There are YouTube channels dedicated right now, live stream channels dedicated to AMC, GME, and Dogecoin. Literally, that's the only thing these guys talk about. And there are thousands, tens of thousands. I actually saw one of the channels had 57,000 people on their live stream following this person, this young person, as he went through and referred to everybody having diamond hands and these space apes, as they're called, because everything's going to the moon. I don't know, unless the moon is south, Chris. unless this is the Earth and the moon's down here, we're not going to the moon. We're going in the opposite direction.
Yeah.
And so I just feel like, if this were the 1980s, or if this was the year 2000, when you saw the crash of 87, and I'm not talking about an overall market crash. I'm talking about certain sectors and certain stocks. We had little mini crashes. The internet, everyone was going crazy on the internet in the late 90s, and we saw internet stocks fall off.
Yep.
Obviously we had big events like the crash of 87, the financial crisis of 2008. But within those time frames, in between those time frames, we've seen these little mini crashes occur. And it happened in cryptocurrency too, where we saw 90% pullbacks, 80 to 90% pullbacks in Bitcoin after the 2014 high, after the 2017 high. Maybe we're at the 2021 high right now too. But the Reddit community there's going to be an awakening. And you kind of see it, you kind of feel it right now happening with AMC. Your comments on AMC?
Comments are, in full disclosure, I was actually long going into that run up. Luck always prefers a prepared trader, is what I say. And, I partially got lucky because I was getting into it for a volatility event. Those volatility bands telling me in mid-May, stock's going to start moving. And I actually bought, usually I'll trade options on something like AMC. I actually bought a bunch of the stock. I was holding the stock long. And one of the things, and I'm just trying to, as a lesson learned or something that our listeners might enjoy hearing, or at least an idea, is when you get into these situations where you've got a meme stock that's going through the roof, don't get glassy-eyed and don't think that, hey, this thing's going to go from 70 to 100 now. This thing could go back down as it is to 40. Put in a trailing stop on these, for goodness sake. Don't think that you have to ride it all the way to the top. I could ask you this question. You know exactly where I'm coming from when I say it, Tom. How many times have I lost money trying to nail the top of a stock instead of just taking what I could off the table? Wetting my beak a little bit. So for those people who aren't trading options on these type of stocks, whether it's WWE, CLNE, AMC, anything that's a meme, man, make sure you're protecting those profits because they'll get taken away from you just as quickly as they come in. A trailing stop is a great strategy, and it's simple. Anybody can do it.
So I have GME on the board.
Yep.
We're going to spend a little time talking about it too. And like I said earlier in the week, they reported earnings. Their earnings were better than expected. That means they lost less than they expected to lose. That's like, if I got flipped upside down and somebody tried to shake the change out of my pants and I still had a couple of pennies left, then I lost less than I thought I was going to lose. But the big news on AMC or GME was not so much the earnings. Everyone expected them to have a losing quarter. The big news everyone was waiting on was who's taking over. Mm-hmm. And like I said before, we ended up getting a couple of Amazon folks. And I think that may be the reason for the cause of the sell-off, as maybe it wasn't what people wanted. All of a sudden now they're bringing big e-commerce to GME. I hate to say it, but big e-commerce is what's needed at GME. If you want this company to survive.
Correct.
And so, maybe it's going to fall back to a level that it should be. I don't know what that level is, but if you look at in this case, we're looking at the last 20 trading days, that level is about half the price of where it is right now, or a third of it. 2/3.
I think I fall in the same camp, and I got a question for you. This could be like a barroom question, Tom. So what is the value of GME? What is the value?
Fundamentally, I don't know. 10. They sell used games, and more people are online getting games now. They've got to convert themselves to more of, and maybe that's what they're going to do. Maybe having some Amazon help under the helm is going to help propel their business. Maybe they're going to do a deal. Maybe Amazon will do a deal with GameStop and start helping to distribute some of their games or online services. So that would be a big plus.
Typically, you can look at, and obviously you can look at a Procter and Gamble, or not so much even a GM or Ford now, because GM and Ford are revaluing themselves as they move into the electric vehicle area. So there's some some fluctuation that's going to happen there.
Yeah.
But typically the market, and I think that's what bothers me about these meme stocks, is that it's just such a random valuation on a daily basis by who? So, we
It
make
is.
fun of,
It's pure speculation. It's pure hope. It's pure greed. It's pure fear.
right.
And really, if you want to trade this stuff, to those I'm talking about, do the opposite of what you think you're supposed to do. What you feel you're going to do. Do the opposite of your feelings, and you'll end up making more money.
Yeah, I hate to say it, but those words that you just rattled off there in that sentence always seem to go with, and you've already suggested this, market tops.
Yeah. So let's switch gears to another volatile area. Has been named by, I don't remember. I saw something that popped on the news earlier today that I believe was JP Morgan named Bitcoin. It's the most volatile asset of all assets. And so let's put the most volatile asset of all assets up here right now. I have switched gears. I'm looking at a 75-day chart. And we know that the top occurred in the last 75 days at 63,558. On the screen, we've dropped all the way down to, now these are closing lows of 33,000 that you see. Bitcoin's trying to catch a bid here. This is a very crucial area, I believe. And the reason I say that is that if you take a look for the last couple of weeks, Bitcoin has been hovering in the 30s. On an average of, I want to say where we are right now, about 37,000 is where the average has been. If you take a look above and below, this thing's got to make a move. There's a lot of chatter out there that that's undervalued. There's a lot of chatter out there. This is a storage of wealth, which I believe. But I also, in my contrarian brain, have to think that too many people talking too good about Bitcoin is not going to be good in the short term. And if we come back down and get close below that 33,409 number, that we're heading into the 20s. And so I still think long term this is going to be a fantastic alternative investment. But I can't help but think that we haven't shaken out the weaker traders yet. I could be wrong. Your thoughts?
I think that this is one of those it's turned into, and it's not a meme situation with crypto, but the headlines right now, and they're dueling headlines, whether it's about governments that are now going to say, hey, Bitcoin is going to be our currency in an effort to shore things up, or you've got Elon Musk sending out, yet another bullish or bearish on name the crypto. It's one of those that when you get so much noise in the trade as we've got right now, sometimes I find I still hold Bitcoin and I still have Ethereum and they're long-term holds for me, but to trade it right now, this one is one that I got to let cool down a little bit, let the volume on that noise come down to an 8 or a 7 from the 11 that it's at right now. And then I think you're going to find the market more willing to step in and say, okay, it's going to turn more into a directional trade. But right now it feels like Cisco back in 2000, where we just take that big jump down, settle, another step down, settle. And you knew you wanted to own Cisco long term. 20 years later now, you do want to own it, but you went through all of that noise. And Tom, that noise is just, I usually try to say, find the trend in the noise. But right now it's so noisy that it's hard to find a real trend unless you're really looking at the long term as you are. And I think that's still a winning trade. Yeah.
And I agree with you. Speaking of Cisco, isn't Cisco trading more like a stable coin these days? All right, Ethereum. I got Ethereum on the chart right now. Now Ethereum still has that. When you go back 75 days, it goes from 1,700 up to 4178, but it made nearly a 100% drop before finally gaining some area. We're in a crucial area right now. 2638.41 is the resistance level. That we pierced through, and we've kind of come into that area. And if I were to take this chart, and I'm going to right now shave it in half, we're going to look at the last 40 days. So you look at the last 40 days, it flips. Now we go from high to low. And as you can see, we ran up, we banged on the 38% retracement once, twice, and I almost believe it looks like we could be heading lower on Ethereum too. And both of these coins, I love them as long-term investments. I love them as an alternative investment. Back in the elder days when you and I were younger, and it was always said, hey, put 10% of your money in gold, or 10% of your money in precious metals. And who's to say 10% was even the right number? You put a small portion, whatever that portion is that you feel comfortable with. And that seems to be the saying now for digital assets like Bitcoin and Ethereum. But, I look at this one too, and it just short term looks like it wants to go lower. Now, I picked some up last week at 2,500, and I'm going to pick some more up if it goes down lower. And I'm dollar cost averaging like I would any long-term investment in the alternative space. But I'm really kind of dollar cost averaging up because I own most of this at much, much lower levels than where we are right now. I just feel like I want to buy these dips on the way back. But again, that's what I'm doing. You own Ethereum too, Chris.
I do.
If you had to choose between Bitcoin or Ethereum, is there one you favor?
Well, right now it's still Ethereum, and I own it a couple different ways. I do have it in a coin account, and then I've also got as many people are starting to do now, the ETF, the Ethereum, the Grayscale, which is just simpler. You can plug it right into your any account. So the reason I'm sticking with Ethereum a little more strongly than I am Bitcoin is simply because of that exact thing I just mentioned, noise. Ethereum seems to have a little steadier hand to it. It's still got the shakes and if I'm looking at ETHE, which is what I'm looking at right now, it's trying to resolve itself around that 50-day moving average. And that trend is still moving higher. You've got the short-term trend coming against it, but it comes down to that volatility right now. Right. And I just don't hear Ethereum as much in the headlines as you do Bitcoin, Doge, anything else. It's kind of like it's the quiet, family member off there just trying to do its thing. So right now I'm favoring Ethereum.
Okay. Hey, as we round out our podcast for the weekend, I want to start and I want to show some folks, the options that are cheap, or the stocks that have cheap options, the stocks that have expensive options going into next week. And so what I have on the screen is a list of each. These are the top 10 most expensive stocks that we see happening. AMC is on there still. Best Buy is on as well. But, as I go along, and let me just scroll this down just a tad here so that I can bring up some charts. And I want to bring up a couple of charts on these. Did I say Best Buy? Bed Bath & Beyond. Earnings we have in 27 days going forward. Bed Bath & Beyond was a meme stock. It's been in the Reddit community, and it too made the big move, jump up last week, and it's kind of coming off, but volatility is still high, so be careful on that one. Here's AMC if you want to take a look at a chart of AMC. We mentioned this already, but it's jumped up, volatility very high. Volatility is now running with this stock. Typically, folks, in the stock market world, volatility goes up when the stock goes down. We almost never see volatility going up when the stock goes up, but these are changing times, and this one is just all over itself from the retail crowd. The other one I want to mention is Kroger. What in the world is Kroger doing in here? Well, when we look at the heat on Kroger, the hottest the options been in this stock have been at around a 71 as we rate it. The lowest has been a 23. It's currently at a 34. And you might say, well, that's not really hot, but it is in terms of food. And because of what's going on in the food industry, that's been part of it. The other thing that's happening with Kroger, it's got earnings next week, right? Earnings are coming out in 7 days. And so earnings will be out before the end of next week. And that means the options that expire next week are a little on the high side. As you can see, here's the lows, here's the highs, here's where we are now. On the cheap side, I found this interesting. Colgate, CL, is as cheap as it's been in the last year. And you can see the stock has gone up. Now, this is what Chris and I typically see happening in the market. Stock moves higher, volatility moves lower. Right now, they don't have earnings coming out for 50 days, so that makes sense that the shorter term options, no one's really looking at those at that volatility. But at the same time, even the longer based options are on the cheap side. So if you like Colgate as a bull, or you hate Colgate and you think this is going down, buying options makes a lot of sense here. I'd rather buy calls on Colgate than buy calls on AMC. And it has nothing to do with the direction of these stocks. It simply has to do with how expensive they are. Chris?
Boy, I'm loving looking at your list here, actually, because Kroger's has been on my list as the earnings. And I've got a little bit of a question to ask here that goes back to options history for you and I. But I love that Kroger trade, because the options still don't seem like they're expensive as I look at my option montage. I mean, they're cheap relative to a lot of other stocks. And technically, Kroger's looks like it's getting ready to make a breakout. You know, my walk down Main Street, Kroger's is right here in Cincinnati. And I hear a lot of good things about pricing, about everything that they're doing at the stores. So I think this is going to be, and that's just my commentary, I think it's going to be a good quarter for Kroger. This is one of those stocks, interestingly, that Warren Buffett has started to warm up to again too. So it's kind of in that fundamental, which I normally don't play there, but it gives you a warm fuzzy. It's like a nice blanket you get to sleep with at night to know that you know Warren Buffett's there. When I look at that Kroger, what you just pointed out, and here's a question I want to ask, Tom. Remember back in the day when we could only trade monthlies, you didn't have weekly options.
Yep.
So if you had a Kroger that was announcing, and let's say you didn't have it announcing the same week as expiration, you had to go out and buy some extra time, and that really messed with the option values on those monthlies. Now that we have these weeklies, it's still strange to me that I can go out, and I get it. The market maker, you know, obviously, or the calculation that goes into that still has to account for the uncertainty around that event. But it still seems like those are heavier priced on the monthlies than they are the weeklies that are happening exactly when that earnings announcement's coming down the pike. We notice the same thing?
I have. I have. And I didn't attribute it to whether it was monthly or weekly options. But you bring up a very interesting point.
Something to watch for when because you and I both know picking the right option is a big part of the trade. And that's not where you get lucky. Lucky is the movement. Picking the option is the skill. So noticing those small things, I think it's great that our listeners kind of can identify with that. Hey, make sure you check the premium on the weeklies and the monthlies. Don't assume that those weeklies are going to be the most expensive. Sometimes it's still the monthlies, and you watch out because it eats into those profits.
Yep.
Or
all right, hey,
more money if you want to sell those puts too.
Hey, before we go,
yes.
Cicadas, are they on the drop?
Oh my gosh, you can't. They bounce into my windows here in my office for 6 hours a day. It's crazy, Tom. I came back from Florida last week. When I left, nothing. When I came back, it rained for 3 days as I was driving up, which is the magic, formula: heat and water. I'm literally seeing them flying all over the place right now. Maybe I'll save a few for you and put them in a box and bring them to Florida. My dog is feasting.
We already have too many transplanted invasive species down here. We don't need any more. Well, all right, Chris. Hey, great talking to you. Have a great weekend, folks. You have a great weekend too, and we will see you again on our next Profit Strategies podcast. Take care. Bye now.
Have a great week.